The number one question I get from newbie real estate investors is, how do I analyze a real estate deal? In this video, I'm going to show you exactly how to break down a deal in just minutes, even in a market you're unfamiliar with, and without ever touching a spreadsheet. Once you master this simple formula, you'll be analyzing deals like a pro in your own market. And stick around until the end where I'll reveal my final verdict: would I invest in this deal? Let's get started. First, we need to set up our game plan. What are we trying to achieve by investing in real estate? Are we looking for long-term rentals, quick flips, or perhaps something in between? By clearly defining our goals and focus, we can quickly eliminate properties that do not fit our criteria and zero in on the ones that do. Now let's define our buy box, essentially the criteria that a property must meet to be worth considering. For this analysis, we're going to aim for a 10% cash-on-cash return with a 25% down payment, and our strategy will be to hold this property as a long-term rental. We're looking for turnkey properties, ideally in up-and-coming C+ or B- areas, and our preference is multifamily homes. By setting these criteria, we can efficiently narrow down our search. With our game plan in place, it's time to start the property search. The goal here is to sift through available listings quickly to identify potential deals that meet our criteria. This is where most people begin, using a tool like Zillow to browse through listings. I've set the filters to show multifamily homes for sale in Broward County, Florida. Let's quickly take a tour. On the right-hand side, we will see all property listings for sale in our market. On the left-hand side, we see a map of where these properties are located. On the top, we can see the total number of listings. Based on our filters, there are over 300 listings. Over 300 listings is a lot of properties. Where do we even begin? A common pitfall I see among investors is this: endlessly browsing Zillow, manually entering each property into a spreadsheet, and painstakingly cross-checking economic stats. This is not the 90s. We have technology at our fingertips. We can do better. When investing in stocks, we use platforms like Robinhood to research and trade. Imagine how impractical it would be to manually pull down daily stock data into a spreadsheet. It sounds silly, right? We should be using investment software for real estate, especially since it's an illiquid asset. You can't sell it instantly like stocks. Plus, it's far more expensive, often requiring tens of thousands of dollars to invest, so we need to get it right the first time. This is where enhanced property search comes into play. By using coffee closers, we automatically filter hundreds of properties down to one. On the left-hand side, we can see all property listings with investor metrics like cash-on-cash return. On the right-hand side, we see a map just like on Zillow, but this map is built for investors. We can see all neighborhoods in the county with a grade from A to D. We can filter on properties that match our strategy. Here I selected turnkey. This auto sorts properties based on profitability, location, and condition. We can even see properties that are top picks. We now found the best listings for our buy box in just seconds. But we have a problem. The best properties do not meet our cash flow goals of at least 7% cash-on-cash return. Is there a way we can still make these deals work? We can with Creative Finance. Coffee Closers Creative is the only software available that helps investors sort, filter, and make offers on properties automatically for Creative Finance. This tool frees up your time, allowing you to focus on analyzing the deal itself. In this view, we can see the top multifamily properties available in Broward County. Properties are sorted by an AI model that identifies the best opportunities. Here in red, we can see that the property we reviewed earlier. Under traditional financing, the same property only had 5% monthly cash-on-cash return, which was under our desired return of 7%. However, with Creative Finance, we can boost that return to 16%. That's triple the return on investment simply by switching to Creative Financing. Now, if you are new to Creative Financing, no worries. You can check out my prior videos on it. But for today's focus, let's dive deeper into this deal. Let's start our deal deep dive with an initial screening of the property attributes. We're looking at a multifamily home in Broward County, Florida. The property is turnkey, meaning it's ready for tenants without the need of any significant renovations. It offers a 16.5% cash-on-cash return based on seller financing. The property is located in a B- neighborhood. It has been on the market for over 8 months. 8 months on market seems like a really long time, meaning the property owner listed the property for sale 8 months ago, but it still hasn't sold. This could indicate the property has issues, but it can also be an opportunity for negotiation. So how do we know if 8 months on market is normal or not? We can research median days on market for the region. By using Redfin's market insights, we can see for Broward County, the median days on market is about 2 months for this area. Our property has been listed for over 8 months, which is 4 times the median. So what does this mean? This suggests either the price is too high, the property has issues, or there's something else at play. We need to dig deeper to understand why this is the case and if this can still be a good deal. Let's start by compiling notes from our initial screening. The first note we are adding is about the time on market. The time on market is significantly longer than the median, so we're going to note this as a concern. Let's take a closer look at the property description. Often the property description can reveal valuable information that goes beyond just the numbers. By carefully analyzing the details, we can uncover insights into the property's condition, recent upgrades, and potential challenges. The first text that catches my attention within the description is hurricane impact windows. Immediately I think, is this property in a flood zone? Next, I see one of the 2 units is fully renovated within the last 2 years. This is right in line with my buy box, turnkey properties requiring limited to no work before I rent it out. I can see the property is fully occupied by tenants. Both units were rented in the winter of 2023 on a 1-year lease. Immediately, this is a red flag for me. I personally do not like to invest in properties with inherited tenants. Inherited tenants can be a mixed bag. On the plus side, they provide immediate cash flow, but you're also inheriting their lease terms and behaviors. If we did move forward, we would need to review the lease terms and payment history. Each unit comes with 2 dedicated parking spaces, which is a significant advantage. Since the property is 4 beds, this means the ratio of bedrooms to parking spaces is 1-to-1. This provides flexibility for multiple strategies, including co-living arrangements. It is also important for tenant convenience. Parking is a must in my buy box, so this is good for me. One of the most compelling aspects of this property is the seller's openness to seller financing. The description says, seller financing available with up to 70% LTV. This gives us the flexible financing options and less of an uphill battle, since we don't need to educate the seller on what creative financing is. This will allow us to move forward quickly and efficiently. So from the property description, we identified 2 main important notes. First, we need to be cautious about inheriting tenants, since they may not meet our standard screening criteria. Second, the seller's willingness to offer seller financing is a significant advantage. Now, let's focus on the location. There are 3 different perspectives we need to consider, starting with an up-close view. An up-close view means reviewing what's within walking distance from the property. The first aspect I like to consider is convenience. By using Google Maps, we can see within walking distance there are several restaurants north of the property, as well as a wine and cheese store in the bottom left. Having the convenience of restaurants within walking distance is a definite plus. In the US, there's been a shift in preference towards walkability instead of driving, making nearby dining options a valuable amenity for tenants. The next factor I consider is foot traffic. I generally avoid investing in properties with excessive foot traffic because of noise levels and higher chance of crime. The tenants I attract are typically working professionals who value convenience, safety, and quiet living. Too much foot traffic can drive away certain tenants like families. In this case, we can see the property is just a block away from a busy road. But is this enough information to know that there's a lot of foot traffic? Not quite. To determine if the area has high foot traffic, we need to gather more information, such as the proximity to stores, amenities, and public transportation hubs. This will give us the full picture. So here we can see there are 3 hospitality facilities. There's a mobile home park, a motel, and a hostel, all catering to short-term stays. This suggests that many of the people booking here are likely on vacation or traveling for leisure rather than for work. Vacationers tend to spend more time exploring rather than staying indoors. Therefore, we would probably expect an increased foot traffic within this area. North of the property is a laundromat. People often step away while their laundry is running, which can lead to increased foot traffic as well. And here's a major factor, a casino. The property is less than a 10-minute walk from a casino. Remember, most casinos operate 24/7. This likely means there's a diverse mix of people coming in and going at all hours, adding to the foot traffic in the area as well. Let's add a note of caution regarding the property's proximity to high foot traffic. With the nearby casino, motel, and major road, we may not attract our typical working professional tenant. Instead, we'll need to consider a different demographic that fits this environment, so not a deal breaker, but something to note. Next, let's take a bird's eye view. So instead of looking at what is walking distance of the property, which we just did, we are now looking to see what is driving distance, so about 20 minutes or so. We'll consider key factors like nearby amenities and major employers, which are crucial for assessing the property's long-term appeal. On the right-hand side, we can see the property is less than a 10-minute drive to the beach. This is a major advantage. This opens up multiple holding strategies, so not just long-term rentals, but also the potential for short-term rentals as well. Next, we notice that there are 2 hospitals within driving distance. This could expand our tenant pool to include travel nurses and offer the potential for medium-term rentals as well. With the bird's eye view, we can add more context to our notes to help assess opportunity and risk. We've now added that this property offers the advantage of multiple holding strategies. These could include co-living, medium-term rentals, and short-term rentals, each with the potential to increase cash flow and our overall return. Our final location perspective is a mega bird's eye view. From this vantage point, we assess the property's proximity to areas of high population density. These densely populated areas often signal thriving businesses and amenities, which can significantly boost the area to be more desirable. Proximity to these larger cities can enhance the property's long-term value and appeal to a broader tenant base. Using Google Maps, we can identify 2 shaded areas, which typically indicate airports or military bases. In this case, they represent 2 major airports, Fort Lauderdale and Miami International. These are among the busiest airports in the world, and having a property nearby can be a huge advantage because it offers easy access for travelers, making the property attractive for short-term rentals or business travelers looking for convenience. You probably guessed it by the airport names. From this map, we can see the property is located between 2 major cities, Fort Lauderdale and Miami. This position has several benefits. For one, it offers residents access to a broad job market and a variety of amenities from both cities. It's also worth considering how this location might affect tenant demand and the potential for rent growth over time. Being close to major metropolitan areas can be an important factor in determining the long-term value and appeal of a property. Quick tip, I always check the distance from the property to these major cities by searching for directions on Google Maps. I set the time to rush hour, so typically 9 a.m. on a Monday, so this gives me a more realistic view of commute times. So for this property, Fort Lauderdale is about a 25-minute drive and Miami is under 45 minutes. Both a reasonable commute for employees working in either city. This proximity can make the property appealing to a broader range of tenants. We've added another key point to our notes. The property's location is desirable for several reasons, with the most significant being its position between 2 major cities. As an added step, let's check for any environmental risks associated with the property. By entering the property's address into the FEMA database, we can determine if it's in a flood zone and assess the risk level. In this case, we found that the property is indeed located in a major flood hazard area. Let's note this is a potential risk factor for the property. Being located in a major flood hazard area is an attribute that requires careful consideration in our overall analysis. Now it's decision time. Should we make an offer on the property or not? We've gathered all our notes on the property, which will help us to decide if it's worth underwriting further and potentially making an offer. As you gain more experience in investing, you'll get quicker at developing these insights. For myself, it typically takes just 5 minutes to analyze a property like this, and I do it all mentally. But that's because I've analyzed thousands of properties in this way. Drum roll, please. First question, is this deal newbie friendly? I'd say no. There are too many risk factors that can be challenging for a first-time investor, including the inherited tenants and the smaller pool of long-term tenants due to the high foot traffic. Second question, is the deal worth making an offer? I'd say yes. The property has significant upside in terms of location and multiple holding strategies, making it a cash cow. However, more due diligence is necessary before deciding to close on it. This would include getting an inspection report, especially to check on any damage from previous hurricanes, and walking around the property at different times of the day. This is to assess the foot traffic from the nearby motels and casino. Our third question, and my favorite, would I personally invest in this deal? No. My number one criteria in my buy box is whether I live in the property myself. Being so close to a casino and a major road is an automatic no for me. Additionally, while not against properties in a flood zone, I prefer them to be raised, with the first floor just being a garage. This property doesn't meet that preference. Having a well-defined buy box makes qualifying properties super easy. I prefer to invest in up-and-coming neighborhoods, close to major cities that still offer a peaceful atmosphere suitable for working professionals and families, along with the ability to screen my own tenants. As soon as I saw this property came with inherited tenants, I knew it didn't fit my criteria. So in real life, I would have stopped reviewing the property once I skimmed the description. By having a strict criteria, I can screen properties and rule them out within seconds. That's the power of software and a well-defined buy box. So how do you become an expert at analyzing deals for your own investment? Accelerate your learning by joining our community, Creative Closers. Our community provides more than just software to help you find deals. It also offers the resources to help you close on them. We support you through group coaching, office hours, and active community discussions. In our community, we actively share potential deals and collaborate on deal analysis. We share the latest trends in real estate and highlight top markets, tailored to different investment strategies. As a community member, you get first access to new tools, including dashboards for discovering new markets, GPTs to coach you through your first deals, and checklists to ensure you cover all your bases to boost your confidence in investing. The journey can be tough, but you don't have to go at it alone. Join our community through the link below, and don't forget to subscribe for more insights to boost your real estate knowledge. Thanks for watching.